Welcome, my friends. Welcome. We are actually live. Holy cow. Okay. Alright, just want to make sure I had the beginning, or at least the name of it set up correctly. Looks like we do. So we're going to do the intro of London, right? Intro, well, at least the start of it, because right now it is midnight New York time, and as ICT would like to point out, that is the time that the day starts and everything starts moving around. I apologize for smoking on my channel, but it is my channel. I can do what I want. Right. So, what I want to look at first, I'm looking at the dollar here, and I'm wondering what is going to happen. And I think my bias has changed, right? So, previously, my bias for Euro had been sideways. My bias for GBP had been upwards. I think I'm changing that to where I think the Euro is definitely going to go down a little bit more than I thought. I think GBP is maybe looking a little bit more sideways. And the reason I think that, and we'll get to that, right? So I am looking at the DXY right now. I'm looking at the DXY, and at first I had this on a 15-minute, and I could not understand. I don't know why. I just was looking at it, and I couldn't understand for the life of me why it was wanting to turn around right here. And I got a little bit closer, and then I saw we had the good old up-down movement. These are the movements that you look for that make things change direction, right? Good old up-down movements. So I saw this. I drew a little bit of fib, and then you have this right here. That right there is technically your order block. I want to change, hold on, let me change my fib style real quick. I think I did this just for putting up a chart one time because it looked a little bit neater, but throw up the fib. You have this big down movement right here. So this right here is your order block in between this whole area. So in between here down to here, right? And then let's take this off, and then let's just move this right. This is your whole order block, right? So the DXY can enter this order block. More than likely, it probably will not pass through it. Go back here. Well, actually, it probably would go all the way down to here, so what am I thinking? Alright, so, also what I want to do is I want to draw a fib on this order block, top to bottom. Looks like we did get through the middle point, but not by much, which is kind of what you look for. So I am thinking that the DXY has more of a chance to actually be bullish than it does bearish. It looks like it has somewhat rebalanced, right? It made a liquidity run here, came up past the liquidity run. That is a sign of bullishness, right? And even when it made the liquidity run, made a spike down, right? It touched this. So what I mean by that is if I draw a trend line from here, and I hate how this thing does this, straight across, You have after it went bulled and bulled through, right? It hit this candle, it came back down, touched it, right? So it closed that gap and then went up, decided to be bearish, had that huge push down, right? And then boom, took off. So this is a very, very to me, and this was yesterday, I think. No, this was today. I didn't even realize it was today. The very bearish move or bullish move, right? And I'm looking at this, and I'm looking at all this price action in through here, and I'm looking to see if there's anywhere where this price can hit and it retrace or make the DXY want to go back down. I'm only seeing one spot, right? And it's very early in the game. It's right there. So I'm going to delete this line out of here. Right, and it's this little, and the reason I have it as this little red candle is because at the bottom of this red candle there is force going up, right? So this isn't just force going down, it's also force retracing, going into this candle and then going up. Let me get into the 5 minute and let's see if there is something even closer. Maybe here. So even then it comes down here, it closes the gap. So you still have price action that kind of covers it up a little bit. So there's not really a gap there to fill. So it could kind of push its way up through here. So this is why I'm thinking that the DXY is going to end up more bullish than bearish, when I had first thought bearish overall. I'm thinking bearish overall because of how much money we're printing, how much the fundamentals of this, how much we're devaluing, we're devaluing the dollar from the stimulus package, right? So I'm thinking of things in fundamental terms. One thing I also want to do really quick is check out Forex Factory, see what we got going on, see if there's any kind of big. Okay, so 7:30 in the morning we have final GDP, so we need to be up and ready for that. I need to set a reminder for myself, definitely for sure. Oh wait, that was this morning, never mind. So maybe that was did we have good numbers? We had good numbers. Finally GDP. I want to see on the DXY, what time was that? It was around 9:30 or so. So 7:30 was the, so it looks like right around the time we got the good GDP numbers, we've been bullish. So maybe that could be the cause for the bullishness. Interesting. We had some consumer confidence that kind of fell, of course. Existing home sales, right about the same, nothing too much. But let's check out tomorrow. Alright, so tomorrow, nothing really happening overnight except for import prices from the euro. Doesn't look like anything's going to change on that. USD, no red stuff, but we do have things that could I don't really know if this is going to affect much, so but we do have a lot of US numbers coming out, so and if these are all good numbers, these could all be all signs again for a bearish DXY. Alright, so let's see here. I'm trying to think. So we hit the, it's just strange because I know we hit the bottom last week, and I was definitely thinking that this wasn't the bottom, right? I was thinking we were definitely heading for rougher roads ahead, And so far we have made a pretty steady comeback. Especially if we want to look at this in like an hour chart, you know, whenever we had that spike came up, you know, back to, you know, a place that we haven't been since, you know, early December. Because once we started falling mid-December, you know, that 1 week, man, we fell hard. But you know, it did spike back up. Usually what that does is that likes to take people out of trades that are short, right? They'll spike up, take them out of trades that are short, and usually wants to push it shorter, or it just could just want to take people out of trades. That way it can continue going longer as well. So I am looking at this little box down here, and I'm seeing this as an opportunity because it looks like it has rebalanced. All right, if we want to do some like RSI stuff, sure we can do that. It does look like the RSI has been increasing. Doesn't really look oversold there. Actually, let's get a cooler color in here. And MACD, I don't know what's going on in the MACD over here, but well, I just got rid of it on accident. Not really seeing too much in the MACD, except for, you know, I'm not really seeing a divergence. It's more just swings and momentum, kind of like the same with the RSI. So I'm not seeing anything unusual here. So that being said, so we did have a dip here, comes up, you have a little bit of a dip. RSI almost seems about the same, but still anything right around the 50 mark you're still okay with, if you are going to go with retail theory. But I don't like to go with retail theory. Sometimes I use it, sometimes I use RSI, especially when it comes to key levels, or really not at a key level. We are just at a level to try to figure out what is going to happen with the dollar. And I think what we're looking at here, I think what we could look at, especially since even though this is one big red candle, you still do have one small little red candle down here. You still could see a dollar kind of back up just a little bit. And it actually, I mean, it got about as close as it could, to be honest. It probably actually did touch that. Got very close, if not. So we had the dollar, right, come close to this bearish order block. Didn't touch it. You know, it still has the ability to come down here, touch it, maybe even go a little bit halfway through it before it pushes up. But I'm still seeing a lot of bullishness in the dollar. So that's why my bias has definitely changed. If we take a look at the euro, as you can see, the euro, I thought we were gonna have a lot of bullishness out of this, but today it collapsed. I got lucky. I got a little bit out of the euro today on a buy, but that's when I had the fibs drawn completely different. Now what I did is I'm taking a look at it this way, right? So if your fibs can tell you a lot, because it tells you what, especially people that have missed the first real trade, I guess you could say, it sets it up for the bankers, right? The bankers are always in control, no matter what. The bankers are in control, and you're not going to be able to beat them out. So you got to figure out a way to play with them, right? So they find a way to make sure they have another way back in. Another way that they have back in is they got to have a discount, right? So they have to have a discount. what is that discount? It's always going to be 62% or more of a discount. So that's why when I draw these fibs, you have the 61.8. I usually do 62. 70.5 is generally like the sweet spot. Generally, you see most reactions right around the 80% mark, which is why I draw the 0.79. And as you can see, what I'm looking at here is I'm looking at a very, not very, but I'm looking at, let me change this up as well to move this to the right. If you're looking at the order blocks of this, right, you have a very, very strong down move. You have a couple big strong down and up moves right here, right at this 80% level. Your last very strong up move happens at the 80% level, right? So what I'm going to do is I'm going to draw, I mean, the line comes at 1.22017. The 0.79 comes in at 0.22015. Let's actually change this up, and let's just actually make it 80% just to see what the number comes out to be. 0.22021. Okay, so it's a little bit above a 4-point difference here. So a little bit more than I thought it was going to be honest, but still. Let's change it back to the 0.79 because I like having it at the 0.79. And I'm actually going to change the 618 to 6.2 just because that's just the way I like things. And the 6.2, which is actually really funny, if you go straight across from the 6.2 to the 618, is where you have this last big down up move, right? So those big moves I talk about, the down up moves, the moves that have explosiveness out of it, those are the areas that you have to look for. Those are the areas you draw your fibs from. Those are the areas that are your order blocks. Those are the areas that are your breakers. Those are the areas that'll turn things around in a heartbeat. So whenever I drew this fib, I saw this, you kind of could have, I mean, I guess I could have drew it. Oh, I need to unlock it. I drew it here at first, and this just didn't seem right, just because there's so much movement in between here and there. And then I looked over and I just saw, this little up, and then this first slam down, right? You don't really need all of this because it's kind of like a slope down, but then you get a stop, and then you get 3 candles that go sideways basically, and then as they're going sideways, you get the up, and then you get the slam down again. So I just saw this candle, it attracted me. I moved it over there, and it just perfectly lined up with everything else. So I thought to myself, this has to be the fib that the pros are using, or that the people that the banksters are using, because it just seems to make sense with everything else. So that being said, either this was already the sell, right, or we could be trying to go a little bit higher into this, which I think is more than likely probably going to be the name of the game, especially from what we've been seeing. We probably could see it pull down, pull back up, and then go down again, something of that nature. Or very soon we could just see it start pulling up until about 2 o'clock and then pull back down after that. So and the thing is that generally with the it's weird, because generally with the Asian session is when you see the draw and liquidity happen, right? You see it just start floating in the direction that it wants to go in. But as soon around midnight New York time until the London session ends, 12 o'clock, New York time, 11 o'clock my time, something like that in the morning, is when everything just kind of slows down and kind of stops, right? And that's when you just kind of see it start floating in a general direction that it wants to go in. And here it's just been sideways, right? So kind of went down first a little bit, and then, kind of went up. But the reason it was doing this is because it was setting itself up, right? It's setting itself up because it knows where it wants to go. So right now that it is 20 after 11 or 20 after midnight in New York, the new highs and new lows have been set for the day by the banks, right? They know exactly where they're going to be. It's us to find it. And I think this is going to be the high. I really do. For the day. And I think we're going to be in here's a confluence right here at the 1.27, right? I don't know what the confluence is, but it's it looks like an order block, an older block that it could be tracing down to, right? So this is an order block that is your last down move before your up move. That's just below that liquidity point, right? So here I have the low attached kind of to it. Not really the low. I guess if you want to really get to the low, it'd be... Well, I could take it off of this first. Really want to get to the low, it'd be right here. But as far as the volume is concerned, this would be the low. But that's even below the area that I'm talking about. I'm talking about this area right here. This area of where you have these spikes that come down, right? These are areas of where people are thinking this is a very, very good support area. So you have another one here. You kind of have them lined up, but they're not exactly at the same area. It's just all in one area. So everybody's looking at this and going, this is a demand zone, right? Supply and demand, supply and demand. There's no such thing as supply and demand. I hate to tell you. There's really not. It doesn't, it's price action, right? It's just price action. Do you really think that there's too much of a supply of euros, right, versus dollars? So all of a sudden the price turns around because there needs to be more of a demand for dollars and not enough supply for euros. Like, no, it's not what happens. It's not what happens. Get rid of your retail thinking. It will help you. It will save you lots and lots of money. So, that being said, it needs a reason to get down past this area here, and it's looking for that reason. And we've rebalanced, we've retraced, right? So I think now, especially with the fib that we have on it, you look for a confluence. I don't know if it's actually going to get down to the 1.27. It's going to have trouble getting to the 1, if you ask me. I think, if anything, the 1.62 is probably perfect for it to try to retrace to. Sorry, I hit the wrong button. I meant to do one of these. So I'm going to get rid of this, right? So I think this 21140-ish area is probably where it's going to try to get to. It's also where this low is right here as well, right? Before this big gap. Right, so it could be trying to get down to this low, to where also this order block kind of formed. This last order block formed on December 11th. Right, so you had this big down move, and then we had to wait 2 days, and then we had a huge up move. So basically, this is still an order block, if you think about it. So what I actually want to do is kind of draw that as an order block, as I normally do with all my other colors and whatnot. So I am going to do that. Let's say, hey, this is an order block. And it just so happens to be at the 0.62. The one, so it'd be 162%. The 162% extension of the current trade that we're at now. So this is why fibs are important. This is why extensions are, and knowing what extensions that you have are important, because your price usually travels to these extensions. They usually retrace to these levels again. I mean, you can't get any more clear than these levels, right? So this down up level, right at the 62 level, or the 0.618, right? And then you also have this right here, this order block right at the 80% level. I mean, I literally have these fibs drawn out like this because these are the levels that I've been taught to be used, and they have served me well, because these are always considered your buy zones, right? They retrace up into these areas, into this zone. It's considered a discount for whoever did not get into this trade in the first place. Or what it does is it gets up in here and it mitigates. What I mean by mitigate is whoever was long in this area, as soon as this comes up and touches like one of these candles, they can let go of that long, and they either did not lose any money or lost money at a very low amount, and then they sell, and then it goes back the other way. So that's why I think DXY going bearish, DXY is going bullish, I should say. It's looking very bullish, just from everything that I've observed. Euro also looking very, very bearish, and with the fibs and the extensions, everything is just playing in super perfectly right now. And now what I want to look at is the GBP USD. This one I still haven't figured out entirely. It's kind of similar, but kind of not. There is an order block right here. Let me close this out. Right, so, and let me do the same thing and move this to the right so we can kind of see. Let me get rid of a lot of these lines. I have no idea, like I said, I've just been, this is all fairly new, even though I did have to get rid of a lot of lines, and still getting rid of lines on this GU stuff. What I see on GU, and it's still tricking me, is that I see these equal highs right through here. Right, when I see equal highs, what that tells me is there's a pull to that area, because there is liquidity there. What generally happens is that you will have people that will set up their longs like right through there, right? So let me see if I can, like right there. So what they'll do is they'll think that as soon as it breaks these highs, right, it's going to come back, retest, and then go. So they already have their buy stops set above these, right? And so generally what happens is that you will see SmartMoney come up just above this and then come back down and then take these people out, right? Because a lot of people think like this. A lot of people think, there's these put your buy stops right above, these levels. This is support and resistance. As soon as it gets there, it's going to retest and go. So why not just go ahead and put a buy stop in there anyway? Not how it works. This is why I don't like doing buy stops, because as soon as it breaks through this, it usually pulls back and takes you out. So that being said, I'm not for sure if it's even going to get that high. It doesn't really set. I mean, they're semi-equal highs, but they're not really equal highs. So but still, they're close enough that it should be a liquidity draw up there. but I'm still thinking bearish because, for one, DXY is bullish. We didn't break a high or a low today with either one of these. But I'm looking at this and I do see a bearish order block right here, right kind of in the same area that we had the euro, right? So it's already gotten close to it. Didn't touch it just yet, but also you have this area right here. So this area right here, this big push up, is also kind of considered the same thing. This is also an order block. It's the last one that's the push up, but sometimes it doesn't have to be, right? You have a high, a low, a higher high, right? This would actually be more considered a breaker than an order block, right? So it's jumped up into the breaker, right? Hasn't hit the order block yet, but these are bullish signals right here, bearish signals, sorry. These are bearish kind of price action right through here. This should tell you that this should push price down instead, even though there is liquidity right above that wants to be taken. I don't think it's wanting to be taken just yet. I think there's going to be something else that's going to happen. Probably going to come up here, probably set another equal high, and then drop down again, and then after that it'll take it. It doesn't always have to, even though there's always equal highs, doesn't mean that it has to be taken, right? Plus there's this huge liquidity run here, right? A huge liquidity run usually means it tries to take out anybody that's shorter or whatnot. And I remember when this happened, just 2 days ago during, I think it was 1 o'clock or something like that. Yeah, it was just crazy. It just jumped up, came back down. Right here it forms a breaker as well. So if we want to take a look at this, and generally the rule of thumb with breakers is that once it re-enters the breaker, right, it's not going to crack the high of that breaker. So here's the high, it didn't crack that high, and then what you do is that it's going to actually get lower than the low that it created prior to. So did it get below that low that it created prior to? Yes, it did. That's bullish movement, or bearish movement, I should say. Sorry. So this is what you would call a breaker sell, right? It moves up into the breaker. It doesn't break the high, and it actually sells below the previous low, right? So now we're looking for basically the same thing. So you have the breaker here, right? I mean, I wouldn't really consider this a break. I guess you could consider this a breaker. That's the thing, is everybody's going, what is a breaker? Breaker is generally just where you have a high, a low, and then a higher high, right? But there has to be some kind of narrative behind it. But considering this is actually a liquidity run, right? This is a liquidity run trying to take out these lows that were below this. I wouldn't really consider this the breaker, right? This wasn't setting up anything as a breaker. This was already just trying to take out lows. This was more of a setup right here, right? So that's why I would consider this a breaker, this an order block. These are the two that are the bullish or bearish components of this piece, and not this one, right? So a lot of people would think this is, support and resistance. It's going to come up here and then bounce down. Well, I mean, it did, but I mean, how far did it get? It didn't really get anywhere. It came down, it hit a bearish order block, and then it came, went back up. But your bearish components, and also here is a bearish component as well. Yeah, it's another one of those up down explosive moves. So you goes up and then hits a top, boom, explosive move down. The thing is, I don't even think we've hit the top of that yet. And this, this right here is considered an order block as well. So let's go back. Yeah, we haven't hit the top of that yet. So I think it's actually playing more on this right here than anything. It's playing on this. It's anybody who thought, who came down, who used this, thought they were going to go long, right? And all the banks are holding it, and they pushed it up, right, to make people think they're going to go long. So a lot of people bought, the banks sold, but they're still holding along, right? They're really deep pockets. They're millions of dollars or whatever in the red. They're just waiting for it to come back up into that area. It did. It came back up into that area, so now they can release their longs, and now they can sell, right? Now they can sell and make their money. That's what's called mitigation. So in between here and here, let's make them some different colors so we can kind of differentiate. Let's go with some green here. Go with some green for mitigation, right? Green for mitigation. Actually, that's not mitigation. That is an order block, or your breaker. And actually, here, let's throw some text to these things so that way we can kind of understand. Breaker. Yeah, I didn't even spell that correctly. Or I spelled it correctly, I just didn't capitalize. Breaker. We have mitigation, order block, and then here's top, mitigation, order block. Oops. And then here you also have an order block, and let's just do this one yellow. And here we have bearish order block. So all of this, you just have all this bearish price action right in here where it's at right now, right? To me, I think you're going to see a struggle getting up past here. I really do. So let's check out, seeing what's going on with the DXY right now. So I'm thinking what could possibly happen, right, is that, see, you have the DXY, you have this little 5-minute order block sitting right here. If you look at the GBP, it's kind of doing the same thing. You have a 5-minute order block sitting right up here, right? The DXY could go down, right, and hit the order block and bounce. If you take out the GBP, that means it could go up, hit the 5-minute order block, and then go down. So, and then the euro, same thing, could go up, hit the 5-minute order block, and then go down. If the DXY does the down, hit the 5-minute order block, and then goes up. So they're all lining up, pretty much. They're all lining up exactly how you want them to be. So what does that say about the euro GBP? That is a good question, my friend. That is a good question. It just depends on which one's stronger. This is one thing I don't like about trading the euro GBP, but since I trade them both, it makes sense to try to trade this one as well. Like I said yesterday, I was right on target with that order block that it hit yesterday. So, I'm always calling those order blocks that last up movement before the down movement. And then what did we get? Here, let me do this again. Move it to the right. There you go. You have these two candles right here that were the up movements into the down movement. Actually, it was this one right here. Well, yeah, I guess you could say this is it too. And so what happened? It moved right up into that and then straight back down. So that's the way order blocks work, right? Your last push up before a big move back down, and that's what we're looking at. We're looking at these pushes up before down. We're looking at here, we're looking at a push up before down. You're looking to go back into these and then do this. And I'll tell you, this actually just happened to BTC, because I just made a pretty penny off of it. And I'll show you exactly what I'm talking about. Boom, right there it is. See, after it pulled, after it made that high, that fake out high, pulled down, came back up into that 75% level, and then dropped. Here I was looking at it as it was moving into it, and here you have that last up move. It's actually move this away so we can kind of see. Right here it is. This is that candle. You can zoom in on it. Zooming in, zooming in, zooming in, zooming in, zooming in, zooming in on it. Didn't mean to move that. So I think about having so many lines every time you move this thing, it just... So there it is, right there. So there is the start of your order block, right? Or your whatever you want to call it, breaker. This is the start of your breaker. This is actually your order block here, because you have a down move and you have another up move, right? And even though this is a red candle, there's still a lot of upward movement in this. So technically, the trade can go as far up as that wick, right? As long as it doesn't break it, technically. As soon as it breaks the wick, then really you're probably going to see price go higher. So what happened earlier is whenever I saw this price moving up into, and I drew this out, and you can probably watch my video prior to this. You saw this candle move up into this, and you probably saw me start playing on my phone. It was because I hit sell. And I was getting a little scared there for a second, because I was like, oh man, it's getting kind of high, it's getting into it. But then it wasn't even 20 minutes later, it was just shot right down. And I was like, yep, there it is. So that just goes to show you, to people who think crypto is this completely different thing than Forex. It's not. They play by the same rules. They have the exact same rules. They both have order blocks. They both have liquidity. They both have breakers. And then people would look at this, right? And this is what happened yesterday. And somebody said, oh, you traded that move. And I said, what move is that? And they said, traded the flag. I said, to you guys, you'd still be in the flag, right? So what I'm talking about is I'm talking about this move over here, right? To where they would draw a flag, something. They would probably draw even like this, right? Because they got these trend lines, right? They believe in these trend lines, right? Gotta believe in the trend lines, right? And then top of it, move it over here a little bit. You got a flag, right? And then, well, what happens, right? You put those trend lines together, and then what does it do? It breaks the flag, but then it goes back inside the flag, and then it drops back out. So where's the real move in there? There isn't one, right? There really isn't a move in a flag or anything in that. Instead, what you use is you use SmartMoney, and you realize there's a bearish order block right here, and that when the trade comes up into it, you sell because it goes into the bearish order block, and then you make money that way. That way you actually make money, you actually make the trade before you exit the flag, right? It makes no sense. Flags make no sense. Trend lines make no sense. They're all products of price action. Anything and everything is all a product of price action. And the same thing is probably happening now. Everybody's looking at this and they're going, this is another flag, you know, or they're drawing this and going to here and going, oh, look at this trend line, it's going to go up and up and up and up and up, and here is this part of the flag here, and you don't, yeah, and so we'll have to wait till it breaks the flag and then retest it somewhere. And no, stop it. You're making things way more complicated than it has to be. Learn how to read candles. Learn how to read candles. It's all you have to do. Know what kind of candles they are. Know what's in them. Know what they implicate. Right? It's like I said, you know, this came up into here. It came up into this order block. You sell, boom, right? You don't have much of a stop loss, because as soon as it gets outside of that order block, more than likely it's going to keep buying. But generally, it doesn't work like that, right? So, what is Bitcoin going to do now? I don't know. It looks like what it's done is it has created two equal lows, and it's going to try to probably break those, right? See, there's liquidity right here. Everybody thinks that this is you see, you have to think, you have to put yourself in that that frame of mind thinking that you probably currently still do have. And that's that, oh, there's support right here. Look at these wicks. They touch and they hit this one spot. They hit this one spot and they bounce off. Oh, this is support. Well, banks look at that and they go, huh. A lot of people probably have their buy limit set there, or their sell stop set there. So let's just push the money through it, back and forth a couple times, take everybody's monies, and then we'll go one direction or the other. Because people start freaking out, you know, especially if they have a sell stop and it goes through the sell stop and pulls back up and takes them out. Well, then they buy. Well, then after they buy, what do? They sell. And then after they sell, what do? They buy. So you have to be one step ahead of the banks to know what they're doing. And they leave you clues. They leave you clues everywhere. And they're in Bitcoin. They're in crypto. It's everywhere, and you can see it, and it's so easy to see. So right now, when I'm looking at Bitcoin, what am I looking for? The last movement, and this isn't that big of an explosive move. I don't like this one. There's a better. The explosive move is down, but it makes a harsh stop before it comes back up. So, that being said, I do like the fact that you're probably going to see it stay below this line. Or if it does come up into here, it's going to turn around and go back. Because, well, actually, you do have a down movement here before you have the up and then the down. So it could actually come back up into this area here before it falls again. Right, because as you can see, you see this up movement right here before it goes down. Right, see that? Guess what? This candle came up, touched it. Right, so it's rebalancing. That's what order blocks do. They rebalance. They go down. They want to rebalance, so they touch the order block. Right, the order block has, you know, like I said, anybody who is buying in this area, right? And the banks go, oh crap, well, we bought to fake people out, so everybody else bought. So now they got a bunch of people buying, so they sell, right? But they're still holding that buy. Well, then they can make it come back up. called repricing. They reprice it to come back up into this area, so the bank can then let go of that buy trade that they had, that incurring any losses, and then they sell, right? And then they make money. It's what banks do. This is what smart money is about. Smart money is about knowing how the banks take advantage of the system, and they play you. So you have to know how to play it, right? I'm gonna see what my time is right now. I know I'm getting close to time. Generally about at 1 hour. It likes to kick me off. I'm at 50 minutes. I got 10 minutes left to go, guys. So if you're thinking about doing anything with Bitcoin, I would be thinking about selling it in between here and here, if it gets any higher, right? If you're a CFD trader like me, if you're one of those people that just buys Bitcoin for equity or whatever, hold on to it. Don't do anything to it. Just hold on to it. But if you're a CFD trader, I don't own any Bitcoin whatsoever. I make my money by buying and selling CFDs. CFDs are what are contracts for difference. It's basically what buying and selling Forex is. The foreign exchange, it means contract for difference, the CFD. You make a lot more money that way than you ever would actually buying and hold. I mean, unless you were like one of those people that bought 10,000 Bitcoins whenever they were $1 or something like that, then yeah, you're one of those people that's a bazillionaire right now. But making money off of Bitcoin right now, it's not in investing, it's in trading. If we want to look at some other crypto, the one I like to look at is Litecoin. I made a good move on Litecoin a couple days ago. It was the same exact type of move. It was this up here. I sold up here because I saw that it had that fake out, what we call a fake out, called turtle soup, right? So it gets really high, it drops down, it pulls back up, and then whenever it pulls back up, it hits this bearish order block. I mean, it's the same repeating pattern in every single one I've shown you guys tonight. Same repeating pattern. Goes down, hits a bottom, comes back up, right? Here was that 62 to 80%. It went just a little bit above that because it hit that bearish order block. Then it sold off. I said there's a liquidity pool right here. It's going to get below that. What did it do? It tried to stay above it and then boom, went right through that liquidity pool. Of course, I knew exactly it was going to go right through that liquidity pool. And now it's doing the same. It's fallen off. But it's starting to come back, though. It's starting to come back. What do I think Litecoin will do now? It came up. It did the same thing. See this line right here? I drew that line right there because that is also where a bearish order block is, I believe. We want to zoom in a little bit closer. So it's kind of it's about where an equal high is. But you see this up move right here, the up move into the down move, right there it is. We want to draw, oops, didn't want to do that, come on now. There it is. So that's your big up move before your down move, right? So either price is going to try to stay above that, and it does for a little bit, but then as soon as it trades below it, it's going to stay below it. It comes back up into it, but then trades below it. And even then, it comes back right there. So it even pulls back just enough to get inside of it. And even then, these are actually some of my favorite trades whenever it does this. Because as you're watching along, what you can do is, pull a fib from here to here, right? And then as soon as you see that spike come up, you just sell, right? You can see it past that 70.5%, right? It's exactly where you want to be. As soon as it hits that 70.5%, you sell. As soon as you sell, boom, there it goes, off to the races. So, and then now what I'm looking at here with Litecoin, looks like we have a bearish order block right here. Alright, sorry, trying to get everything in order. But see, came right up into that bearish order block. And into the second bearish order block, but then started to fall back down. Are there any bullish order blocks? Yeah, it looks like there was one right here. So you see that big down push, a down push, and then it goes up, makes a little kind of smaller down push, and then finally takes off. So these are both bearish or bullish order blocks. So once it comes back down into that, boom, price jumps back the other way. For mitigation, for anybody, that's because when that down push happens, the banks are holding those sells. It can go all, but then they still buy, right? They're still holding that sell, but they're making all that money on that buy. They let go of it. Eventually it comes back down to where they had that sell. They release their sell. They make all the money. That is how the banks do it, folks. It's just always how it's been done. I wish there was another way to tell you, but it's all a facade. It's all right in front of your face, and there's nothing we can do about it except for know what's going to happen. Anyways, thank you for watching my videos. Again, check out GU. It's probably going to get a little bit higher, who knows, and then sell. Euro GBP, I am not 100% sure. I'm waiting to find out what's going to happen with this one. And then Euro USD, again, we're almost in the sell zone, maybe a little bit higher, and then sell, because I think the DXY is probably going to be bullish. All right, right, we still have a little ways to go to get down to this bullish order block, but I've only got about 3 minutes left before YouTube kicks me off of here, because it likes me to have an hour, and that's about it. So before I will get off of here, I do want to say, please hit that subscribe button, hit the like button, share it with your friends if this gave you any kind of good information that you like. I enjoy sharing my charts with people. I learn from the Inner Circle Trader. If you don't know who that is, please look him up. He has been studying, and trading for over 20-something years. I basically take his ideas and I put them on the charts. His YouTube channel has a lot of he doesn't really, I mean, he does do some chart stuff, things like this, but he also does a lot of lessons, a lot of intermarket analysis, all kinds of different analysis, things that you need to know, especially like setting up your fibs, things like that. That's why I have all this, how to use a daily bias and things like that. What I do is I try to take his teachings, I try to come to TradingView, right, and then I will try to look at something like the dollar, the euro, or and the GBP, just because those are my favorite three. I try to stick to 3 pairs, and I try to do my best to try to analyze them as best to my ability as to what ICT would train me to do. And then I try to pass that information on, and even if I'm wrong, you can always still make money when you're wrong. You can make money when you're wrong. I did it yesterday. I was wrong on my bias. I thought everything was going to be bullish. Didn't matter. I ended up selling everything off. I ended up having, I think, 80 something pips before the end of the day was over. So it just goes to show you, what you can, if you want to stick to it, you can. You just got to know when to, set your limits, know what you're looking for, and to keep going. So anyways, I want to thank you all for watching. Thank you so much. Again, my name is Ted. This is Bodies and Wicks. Give it a like, a share, and hopefully I shall see you all again very, very soon.